Hello everyone, welcome to this webinar today where we're looking at financial forecasting package of services. I welcome people who are watching this on a live feed to various social media outlets. I hope you enjoy this presentation. If you're watching on a live feed and you have any questions, unfortunately you can't access me directly whilst we're presenting the webinar. Can you please send me an email, peter@essbiztools.com.au, and I will get back to you. If you're watching this webinar direct, that you've booked through ESS BIZTOOLS and you have a question, can you please send them through to us? And we will get you the answer later in the webinar. Righto, we're ready to go. So we're just fixing this up. Should you be the financial storyteller for your clients? What's this financial storyteller's role? I think it's to help clients navigate the future. To identify this, you need to first of all understand what your client has done in the last 12 months to help your clients navigate the future. Has your firm churn out the same old compliance forms, hoping that this gold mine will last forever? Well, unfortunately, it's not going to last forever, will it? Does your current service entail anything about the future, or is it all about the past that we are looking at? Are you the recorder of past events like an historian, or are you an innovator helping your clients to innovate new products and services? Why do you need to be the storyteller? I think many SME clients are babes in the woods when it comes to financial business matters. They need a storyteller to show them the long-term results of today's decisions. Some of your clients are making hundreds, if not thousands, of decisions every year affecting their business. Wouldn't it be great to be able to show them what the financial end result will be of those decisions that they are making? This is what happens in a larger business that has a full-time CFO, because primarily that person's role is to show the CEO and other members of the leadership team what the results will be of today's decisions. Experienced accountants who are privy to just about every decision of the business are what CFOs are in larger businesses. Key function is this analysis of current business performance, preparing realistic budgets and formulating projected balance sheets for at least up to 5 years, and some public companies go even further. So accountants need to be the storyteller so that your clients get a clear understanding of what today's decisions, today's commitments are going to mean in the future. Now, what are these decisions? I think they're things like capital expenditure, buying a big asset, like they're going to cost $1 million, going into debt to buy it, or issuing new shares to new shareholders. Expansions and acquisitions. A lot of our clients want to do that, but why not take the time to sit down and show them what the balance sheet will look like in 5 years' time? Research and development. I think SMEs are great participants in the research and development space, but it's a long journey in most cases. What's the result going to be? Are they pursuing international patent applications? They cost a lot of money and they're quite time consuming. Is this what your client wants to do? The decisions might be built around team recruitment and training, making that investment in the team, making sure they've got interesting and challenging work for them to do. Perhaps they're going to start export operations. Now, exporting is also a long learning curve. There's a L plate on the business for some time as they go through the learning process. What's the result going to look like, do you think, in 5 years' time? Therefore, the client needs to sit back and say, is this all going to be worthwhile? Expanding into an export operation. Sure, they might be able to get the export market development grant, but is it worthwhile? What about technology upgrades? What's the level of investment in stock and debtors going to be? Is this business a lumpy business in that the raw materials have to be purchased at certain times of the year? And if they're coming from overseas, what's the stock build-up going to be? How much money's got to be invested in stock? And what's the debtors' days outstanding history for this business? Is there customers that don't expect to pay in 30 days for some reason? Is raising capital one of the options that the owner or directors need to look at? And if so, what's the valuation of the company in its present state? What valuation will a potential investor place on the business? How many shares will need to be allocated? What percentage of the company is this? Is your client satisfied with this? Or do you think they should be trying to get more loans? But does the business have spare assets that can be offered to the lender as security? And what is the end game going to be in 5 years' time or even longer from the issue of new shares and borrowing money? In fact, the company's issuing shares, one would normally assume there's going to be an ongoing continuation of the expansion of the business. Is that what you're forecasting? Because if not, the company's got an extra group of shareholders to service with dividends and perhaps not a increasing profit pool. Is it time to change? I think this is a question that a lot of accountants have got to be seriously looking at present. The conservative mould of accounting firm delivery needs to be relaxed, I think. Now, I've been there. I ran a firm for many years. We always tried to perform a reasonable amount of business advisory services, but nowhere near the level of what business advisory services is now and what it can be. But what are you preparing? Many accountants are only preparing a profit and loss account and a balance sheet, which looks at last year, a tax estimate for last year. What help are you giving the client as to what's going to happen today, tomorrow, the future? I think that's the real role for accountants, because that's the role that CFOs play in larger companies. Don't your clients deserve the best possible financial advice that you can give them? I think we need to make sure the work for the government is done appropriately, the tax return, and obviously the business needs accurate financial accounts because they're the foundation for the preparation of budgets and cash flow forecasts into the future. But the real skill input that you can make is showing the client what the business is going to look like in 1 year, 2 years, 3 years, 4 years, 5 years' time. It will help them make better decisions. So the SMEs need real additional information in real time. I think that's business plans, budgets, cash flow forecasts, projected balance sheet for the next 5 years. So how are you going to deliver this? Our recommendation is that accountancy services should be delivered as a virtual chief financial officer 52 weeks of the year. But if the client's not happy with that or a bit worried about the cost, at least on a monthly basis. So the service offerings will be built around the client needs a business plan for 5 years, which is updated each year. Budgets for each individual business units. Not putting it all together in one profit and loss account, breaking it down into management units so that key performance indicators can be prepared for each of those units. So accountability can be clearly allocated to the manager who's going to have his budget and his key performance indicators, or her budget and key performance indicators. There's a cash flow forecast, projected balance sheet annually for 5 years. And all this will be supported by the key drivers, which is probably the biggest single component of the whole forecast package. Because that's looking at the raw materials, the raw material inventory, looking at the shipping delays, when's stock going to be purchased, when's it going to be paid for, what's the build-up of stock going to be at certain times during the year. So the service offering that you're doing is a three-way model of key performance indicators, budgets, cash flow forecasts, and projected balance sheets that the banks now require. The banks are not prepared to accept, and neither should they, a budget which is based on last year's figures plus a percentage. That's not budgeting. The model we're suggesting is. In the discussions with your clients, I indicated earlier, the preference is that this service that you're offering is 52 weeks of the year. Now, some clients might not be happy with the weekly service. They might, and you might think there's not enough work there to do that. But it could then be bi-monthly or monthly. My strong recommendation is that every client should be committing to at least the monthly service package. Why? Because this is the type of service you're offering. You're putting your organisation into the desk of a CFO within the organisation, supplying the service virtually. You can't do that any less regularly than monthly. So what's going to happen weekly? And this should happen if you're still only performing the service monthly. You'd set the system up and have the office manager or someone else within the organisation responsible for these documentation. I think it's very important that every business has a weekly performance report prepared. Big companies do this. Woolworths, Coles, IGA, the major meat companies, all prepare weekly reports, weekly profitability reports. I know that in Woolworths stores, they prepare this type of exercise for every department. There's 40, 50 departments in a Woolworths store. So that the overall manager of that store knows how the butcher shop performed by Monday lunchtime. He knows how the bakery performed. He knows how fruit and vegetables went. Now compare that to the small business operator who might only be 20 metres outside the entrance to that Woolworths supermarket, who's trading as a butcher shop or a cake shop or a bakery or a fruit vegetable business. Is he getting his results for the previous week up to the Saturday close of trade by Monday lunchtime so that he can sit down and discuss it with the general manager of that store, how that performance went? In most cases, no, unless that particular business is already being serviced by a virtual CFO type arrangement. That is what your clients need to help them survive in business. There'll be key performance indicators prepared each week. Gross profit percentage, labour to turnover, the average sale, and numerous other figures, which on their own mightn't mean much, but they do when they're compared to previous week's trading and to the budget, so that variances can be established and reviewed. So what's required monthly? Well, the first one is the obvious one, I hope. Financial accounts for each business unit. The profit and loss account, but broken down into business units. At the end of the year, you can consolidate all this into an overall profit and loss account. But month by month, I think you really need to have broken the business down. So if your client's got a warehouse, that's one business unit. If they've got a mechanical workshop, because they're doing deliveries, that's a second business unit. If they've got 3 retail outlets, 3 separate P&Ls, so that the individual performance is able to be clearly analysed. So comparisons to budget can be prepared, and the performance report is prepared for consideration by the manager responsible for that business unit and the leadership team. Financial analysis, which would be in your court as the virtual CFO. Analysis of debtors, debtors days outstanding. Who's the problem debtors? Inventories. What's the investment in inventories? How does it compare to budget? What's the days of stock on hand? How does that compare? Work in progress. Creditors. Are creditors being paid on time? What's the total creditors days outstanding? What's the bank position? And the monthly process we recommend is culminated with the business review meeting each month. Now, I think in your engagement, you should have submitted to your client that you will facilitate that meeting. This is the leadership team. It's not the board of directors or the advisory board, which hopefully as the virtual CFO you are a member of in any case, but this is the leadership team sitting down and analysing the financial performance. I think it's a great idea if the CFO facilitates this, because that's what happens in many larger organisations. It's the CFO's role. It's attended by the leadership team. Review all financial matters. Look at the bank relationship. And out of that, a report is prepared to go to the board of advice or the board of directors, whatever the company has. And hopefully it's got one of those in a very active manner. Periodic. What other periodic work would you be contracting to undertake for your client? I like this term, deep dive into the business's performance. Remember the comment I made earlier that what we're looking for is the knowledge of the business, an inch wide but a mile deep. Dive in. What's the profit per customer? Updating the key performance indicators into a business health check. Doing comparisons to benchmark, whatever industry your client's in. Reviewing the risks applicable to the business. Personal property securities register is the one I've entered there, and then the risks applicable to this particular business. And within ESS BIZTOOLS, we've got articles on a whole range of risks that can apply, some to a lot of businesses, others to only certain businesses. Research and development. Is the company undertaking research and development? What's the results? Are the reports being prepared? What's the follow-up? Is there a need to register a patent or protect intellectual property? What's the position? In the deep dive, do you analyze the business and decide that there needs to be some additional funding found because you're doing the forward projections? This build-up of investment in research and development and expansion of the business and other things is meaning that the business needs more funding. So where are they going to get that from? Is it share capital by issuing shares? How are they eligible to raise capital as a crowdsourced funding equity raising company? Which means that their turnover has to be under $25 million. And the value of gross assets has to be under $25 million. Or is Section 708 appropriate? The maximum that can be raised is $2 million from 20 investors. But there is some limitations on raising money as Section 708, because remember, a private company can only end up with 50 shareholders. So if you raise a couple of rounds of $2 million, which you're entitled to do, you might very well hit the shareholder limit. So what do you do then? You have to incorporate then as a public company. Succession planning at all levels of the business. What's going on? Succession planning is not just for the CEO, it's for everyone in the organisation. This gets back to training and development of their skills. Debtors management. Is debtors days outstanding way too high, especially when the business is compared via a benchmarking process? Inventory management. Is there too much money getting tied up in stock? Corporate governance. Are emerging leaders being tutored in corporate governance issues? This is a great role you can perform, making sure they understand the duties and responsibilities of directors, but directors' duties and responsibilities should also be understood by the leadership team people. The pricing or the fee setting that the business is adopting, is it realistic? Could it be changed? Creating incentive programs. Obviously, businesses need their leadership team and indeed the whole team to be working very efficiently. So is there a proposition to introduce some incentive payments? Assistance in mergers and acquisitions. Incidentally, the CommBank Accounting Market Pulse report that was released in late May this year indicated that business advisory services, including mergers and acquisitions, was forecast by the 45 firms that were surveyed for that report to be prepared, was identified as the highest growth area in the next 12 months, mergers and acquisitions. You had much to do with them of late. This is a quote from Andrew Geddes, who many of you know, but if you don't know him, you're probably very young. Andrew is a guru of this industry. He was one of the joint founders of the Financial Management Research Centre at the University of New England. He then became a very well-known accountancy industry coach and became a successful public company director and was for 10 years chair of a company that was rated as a part of the top 200 companies on the ASX, Green Cross Limited. Now, Geddes originally advised the Green Cross founder and managing director for many years, 35 years ago, and kept in touch and was made a director about 15 years ago, and then for 10 years was the chair of that company. Andrew's saying this is a new business model. I think it's going to revolutionise the sector globally. Is that the feeling you get? It's definitely the feeling I get. And I look forward to being able to work with you on that service. I got ahead a bit there of my slides. What do you think? What do you think you will be able to do in your firm? And this is all very interesting at present, isn't it? Because 2 weeks ago, we had the comments from the tax commissioner in which he issued a warning to accountants who are primarily concentrating on the wage earner and very small business market, that the market is going to change as the tax office improves its computer systems, as the software is improved. He doesn't believe there's going to be much work at all for accountants to do on preparing those tax returns within 3 years. Now, what's going to happen then, do you think? Those accountants, and there's a lot of them around Australia, who are supplying that type of service to a market that exists at present. But the tax commissioner is saying he doesn't think it's going to exist. He suggested you start developing some new career path by developing your consulting skills. And I agree. I think you should start your move now. Start looking at the new opportunities. And one of the new opportunities is to gear up and start the process being able to offer virtual CFO services. And for those of you who are already in the marketplace and you are comfortably dealing with business clients, I think the question you've got to ask yourself, are you supplying a broad range of services? Are you supplying this concept of identifying and articulating the future to your clients? Are you really performing a virtual CFO service? And if not, my sincere suggestion to you is that you look seriously at it, like today, about adopting the concept that you're going to be supplying that type of service to your clients. Because if not, I think you've got quite a number of competitors within the accountancy industry about to start looking very closely at those business clients that you've currently got, because they're going to take heed of what the tax commissioner is suggesting to them, or at least I suspect a large percentage of them will. ESS BIZTOOLS, in conjunction with Plan Guru, who I think is the best producer of budgets, cash flow forecast, projected balance sheet software available to us, can assist you to implement, because Plan Guru is part of our journey in implementing these products. Want to know more? I'd invite you to book a complimentary 45-minute Zoom meeting with me by telephoning 1-800-232-088. And I can give you an overview of how I believe your firm could implement these types of services. Obviously, I'll be asking you a few questions about your accountancy firm, your team, your clients. So it would help if you got a summary prepared, how many of them are in business, what fees are you generating, what services you're offering beyond annual accounts, P&L and balance sheet, tax return and the tax estimate amount. What other services do you give your clients at present? But give me a ring, 1-800-232-088. We can set up a time. Or you can go to our website, www.essbiztools.com.au, and have a look around at the product packages that we've got there. And when you've done that, if you want to, you can book to see me online, just on ESS BIZTOOLS. Book an appointment with Peter Towers, Managing Director, ESS BIZTOOLS. But you also might want to look at our other website, which is our grant finder. Some of our clients find this very, very helpful for them, because they're able to be a key supplier of information to their clients, because they are able to alert their clients on grants that they might be able to apply for. Now, grants have become very competitive. Our observation is the state governments in particular are issuing new grants and only giving you a couple of weeks, in some cases even less than that, to apply. So the quicker you're alerted to grants for your clients, the better. So you can go to www.essbizgrants.com.au and have a look. And you can avail yourself of the invitation to trial a client for 2 weeks on that grant site and see how it works. Then you can subscribe. Now, if you subscribe for our financial forecasting package, you receive the grant program, or to our advanced package, which doesn't include the Plain Guru software, but you will get access to ESS Biz grants. So it's worth looking at. But if you're ready to join us now, you've been looking at what we're doing, you've been reading Accountant's Minute, which is our weekly publication. You can go on to our website, essbiztools.com.au, and hit subscribe and select whichever package you would like to subscribe for. The financial forecasting package, which is everything that we have, including the Plain Guru software and the training on the use of the Plain Guru software, delivered by Paul Barnaby, a fellow of the Institute of Chartered Accountants. Or you can subscribe for the advanced package, which includes everything except the Plain Guru software and obviously Paul Barnaby's training. Or if you're very small or just wanting to start off on this very gingerly, why not look at our starter package? For an annual cost of around $2,000, you can get started. Now, you don't have everything that we've been talking about, but you can build on it. You can start developing your clients. Now, this is ideal for any firm that falls into that group that the tax commissioner was really talking to. I think you need to get out and start growing your business now. And the way to do that would be with our starter package. So if you've got any questions on any of that, there's the number, 1-800-232-088, and I will talk to you and we'll work out what I think is a suitable program for you. I'll prescribe it to you, and then it's up to you whether you accept my suggestion. Okay, we have free webinars, education events, and we have another one next week. So obviously today is one of them, and we have another one offering virtual CFO services on Wednesday, the 5th of October at 11:30 a.m. AEST. Obviously that's 12:30 p.m. AEDT, because daylight saving starts again on Sunday morning. So to register for that webinar, please go to our website, www.essbiztools.com.au. I think I've given you the contact details, but if you want to, you can send me an email, peter@essbiztools.com.au. Thank you for being with us today. Stay safe. Have a great day. And if you do have any questions on any of the matters which we've discussed, please contact us, peter@essbiztools.com.au, and I will get back to you. Goodbye.